It's almost 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories.
Tonight, people here and around the country have spoken, and they're ready for change, to end the politics of performance and return to politics as public service.
Man of the moment, Keir Starmer there. UK Labour set for a landslide win as official results roll in. Voters turning on the Tories after 14 years in power. We're live in London with the latest. Also coming up, global stocks trading near records as investors await the US jobs report for fresh clues on the rates outlook. Plus, Samsung shares at a 4-year high after an AI-fueled memory chip recovery delivers its fastest sales and profit growth in years. So that's Samsung results helping prop up the Kospi. Let's take a look at how markets are faring more broadly. Avril Hong's in Singapore. Avril.
Yeah, Paul, we're going to be keeping an eye on those UK election results along with political developments in the US. But for now, I think Asian investors are looking ahead to the US jobs report amid this deflationary narrative that's been taking hold. And that's helping to spur appetite towards stocks, particularly in the tech sector. We're seeing the Bloomberg Semiconductor Index well in the green today, but also thanks to what we're seeing out of Samsung's profits and the optimism that we're finally seeing that recovery in memory chip demand. We're also seeing the dollar softer amid this deflationary narrative that's proving to be a bit of a relief for the Japanese currency, along with the offshore yuan below 730 against the greenback. Also in China, keeping an eye on those Chinese bonds as that rally peters out today at least. As the PBOC has been giving more details on its plan to sell bonds, it says it's readying hundreds of billions of yuan in the securities to sell. And this is after agreements with some of these financial institutions in the country. We're seeing almost a 2 basis point move on China's 10-year yield. Let's flip the board because as we keep an eye on what we're seeing out of the Asian investment space, the pound is also in focus. It's pretty flat. I think the expectation is that sweeping victory for Labour, that could mean improved ties between the UK and some of its neighbours, which is typically something that's seen as supportive for the pound. But despite this flat move against the greenback as well as the euro today, keep in mind that the pound has already been strengthening in the past week or so. Let's flip the board and take a look at what we're seeing in stocks because the FTSE 100, along with the mid-cap gauge, the FTSE 250, which is geared more towards the domestic economy, has been outperforming these European peers amid some uncertainties in other European economies. And the FTSE 250 might be the one to watch when trading open simply because they could benefit from the slightly higher fiscal spending. Paul.
All right, thanks very much, Avril. Now let's hear from Labour Party leader Keir Starmer addressing supporters as his party heads towards an election victory over the Conservatives.
Because tonight people here and around the country have spoken, and they're ready for change, to end the politics of performance and return to politics as public service. The change begins right here, because this is your democracy, your community and your future. You have voted. It is now time for us to deliver.
All right, that's the man who's just hours away from becoming the new UK Prime Minister. Let's get over to Bloomberg's Ewan Potts in London. So, Ewan, a heavy defeat appears certain for Rishi Sunak's government. All the polls predicted it. That decision to cause a snap election looking like a serious misstep, but really that was just one of the last in a series of missteps. So what went wrong for them?
Well, yeah, Keir Starmer there, the Labour leader, talking about change. And this really was a change election. After 14 years of the Conservatives, the UK voters have decided it is time to boot them out. It was a difficult campaign for the Tories. Rishi Sunak's party really never got a grip. That 20-point poll lead, which the Labour Party held throughout, really didn't budge. The exit polls suggest that Labour will win a landslide, some 160 to 170 seats. That's the projected majority. Just to put that in some context, Tony Blair got a majority of 179 when he won back in 1997. But it has been a very difficult election for the Conservatives. And Labour's promise of change, ending the chaos, as Keir Starmer likes to say, well, that seems to have won the night.
Well, talk us through some of the key results we've had so far. Counting not finished yet. Who are some of the big names that aren't going to be in the next Parliament?
Yeah, fascinating to dig down in some of the detail. We've had about 250 results so far, still another 400 to go. Interesting if you look at how the vote shares fall between Labour and the Liberal Democrats. So these are the two key parties fighting the Conservatives, and voters have been very efficiently picking the party best placed to beat the Conservatives in their area. So that is knocking out a lot of Conservatives. The Scottish National Party are having a very bad night. They've been the overwhelming force in Scotland, the very dominant force in Scotland for 15 years now. They're looking like they may fall to 10 seats or fewer. Interesting story on Reform UK. That's the party of Nigel Farage. You'll remember him from Brexit. Projections they could win a double-digit number of seats. It's looking like it may not get quite to that yet. But Nigel Farage himself has won his seat in Essex near London. And some big names already getting knocked out. We've seen more than one cabinet minister lose their seat. Plenty more of those expected to come. Big one to watch will be Jeremy Hunt, who's standing in a prosperous seat near London as well. He's under threat from the Liberal Democrats. And an interesting headline on the Labour front as well. In an election like this, you wouldn't normally expect Labour to lose any seats, but Labour have already lost two of their frontbench team, one to an independent in the East Midlands and one over in Bristol in the West. That went to the Green Party. They're picking up their second seat. So two members of Labour's frontbench team being knocked out. Interesting to watch Rishi Sunak. That declaration will be quite soon. The Prime Minister's seat, very safe. I think there's an outside chance that he will lose that, but keep an eye on that one as well.
So it's almost certain, well, I think we can say it, we're going to have a new government in the UK. What are the priorities now, particularly on the economic and foreign policy front?
Yeah, well, I think it's fair to say Labour ran a cautious campaign after their heavy defeat last time when they stood on a very left-wing platform under Jeremy Corbyn, who incidentally has just won his seat as an independent. That was a pretty stunning result coming through in London. Labour this time really put caution first. They said they would not increase any of the major taxes, income tax, national insurance, VAT. They said they would leave corporation tax rates unchanged. They say their priority, their number one priority, is to get the economy growing again. Under the last Labour government, the economy grew by 2.5% on average of GDP per year. It's been pretty paltry in recent years, so Labour are keen to get that going again. It will be a difficult challenge. They, of course, want to spend more on public services, and particularly the National Health Service, our nationalised health service in the UK. But the trouble is, there is really not much money to go around. The fiscal constraints on the new government are really quite considerable. And of course, once you rule out those tax rises, that only leaves borrowing. And they've said that they will stick with the Tories' borrowing limits. So that is to get debt falling as a percentage of GDP over the course of the 5-year forecast period. They're not going to change that. Labour have, though, said that they will borrow to invest. So we can expect a little bit more of that. On foreign policy, I think there will be a certain amount of continuity. They're keen to build relations with the United States. It'll be interesting to see how Keir Starmer deals with President Trump. I think the two men, it would be fair to say, are very different characters. Keir Starmer is a lawyer and doesn't really speak from the hip. And interesting to look at Labour's policy on Europe. They've ruled out rejoining the European Union and the Customs Union, and the single market indeed. But they do want closer ties and warmer relations with Europe. So they're going to try and get a new veterinary agreement and some other smaller agreements. But there's no desire, I think, on either side to unpick all those lengthy negotiations with the European Union. They also want a closer security and defence partnership with European neighbours. So plenty in the inbox of likely Prime Minister Keir Starmer.
All right, Bloomberg's Ewan Potts there in London, and we will keep an eye on those results and keep you updated as the numbers roll in from the UK election. But let's bring in our first guest for some more analysis here. Parisha Saimbi is a strategist for EM Asia Foreign Exchange and Local Markets at BNP Paribas, and she believes a large Labour majority is going to be bullish for the pound over the medium term. And to your point, Parisha, we have seen the pound on a pretty good win streak, 7 days long. That's its best performance in 4 years now. How enduring do you think that's going to be, particularly when you consider some of the spending challenges that the incoming government's going to be up against?
Thank you. So we do think that medium term, the election outcome, especially if the exit polls are right, would be particularly positive for the pound. And that's because the Labour Party have struck a careful balance between fiscal prudence as well as positive growth spending. And we think ultimately that could help to usher in a period of relative political stability for the UK. And given that yields in the UK are relatively elevated, that could help support ongoing portfolio inflows into the UK and keep the pound supported. But I think in terms of levels, where we could realistically get to, we're forecasting that euro sterling could fall down to around 83 and cable could rise up towards 128 by the end of this year. I would highlight, though, that in the near term, we do think Bank of England policy will be more important, especially as this election outcome was relatively well expected, with the polls having suggested that Labour landslide outcome.
And, of course, helping to support the pound, we actually have a weaker US dollar today. I haven't uttered those words for quite some time. We do have a jobs report coming out of the United States on Friday. Employment growth is seen slowing. In terms of the Fed's next move, now seems to be a coin toss. Is it September? Is it December? What's your view on this?
So our base case is that the Fed will move to cut rates in December only. And I think that's really a function of them having reiterated this stance that they have time to assess. They're waiting for more data to get more confidence that we are moving back towards that 2% inflation target. And we heard that from Powell even earlier this week in his comments. And while that data is on the right path, we think with the growth outlook still remaining relatively resilient and with the US elections coming up, we think they'll err on the side of being prudent and wait until the December meeting to begin those rate cuts.
And how about the picture for 2025? Are things getting a little bit more murky then? Because, look, whoever wins the White House, and the question of who the candidates are is becoming a live one as well, but let's set that aside. Whoever wins, both candidates aren't afraid of spending. Is there a risk that inflation could reignite next year?
I think ultimately when we do look at both parties, it's likely that we could see a more protectionist stance out of the US. But ultimately, we do think that the Fed will be able to cut rates unless we're in an environment where significant tariffs are potentially being implemented, and that could push inflation expectations higher, and the Fed may need to respond to that. But assuming that that isn't the case, we do think that the Fed can cut once in December this year and a further 4 times for next year. I think what will be key, though, and importantly what we're looking for in the payrolls data today is whether we see a sharper deterioration in the labour market. And that's something that the Fed have also highlighted are on their minds. And if we do see a sharper deterioration, then that could warrant earlier or more aggressive rate cuts potentially being priced into markets, particularly, we think, for 2025. So we do think at the moment, especially given the data out of the US has been a little bit more disappointing or at least softer, that we do think markets will respond more quickly or more aggressively to softer labour market data today than it would do to stronger data. So we do think the risks are more asymmetrically skewed for weaker data.
Well, we do have a slightly weaker US dollar today, as I mentioned. Another beneficiary of that is the yen. It's back below 161, although still pretty weak. What's your view on the possibility of intervention here from the Ministry of Finance, and is it even worth it at this point?
So we are above that key psychological level of 160. And so we do think that the risks of intervention by the authorities are elevated here, especially given the comments that we'd heard from the authorities over the past couple of weeks. That being said, we think that they will want to act when the external environment has shifted. And so if we do see weaker data out of the US, and perhaps in today's non-farm payrolls data, then that could give them an opportunity to intervene to help to strengthen the yen as a result.
They've got the Bank of Japan meeting at the end of the month as well. What are you expecting to hear in terms of tightening? Because this could be the meeting where we hear something. Do you think that that's already priced into the yen, though?
So we do expect that the Bank of Japan will eventually move to normalized policy, but we do think that first rate hike from them will come in September rather than at their upcoming meeting in July. But even still, we do think that with rate differentials being so wide, we don't necessarily expect that action from the BOJ to hike rates, even if it is sooner or more aggressive than we're currently expecting, will necessarily change much for the yen. We still think that for dollar yen, the price action is very much more so dominated by US developments.
All right, Parisha Sembi of BNP Paribas, thanks so much for joining us. Just to update you on some more news out of the UK election, Labour has taken the seat of Penny Mordaunt in Portsmouth North. Now, Penny Mordaunt was tipped as a potential future leader of the Conservative Party. She'll no longer be in the House. She is the former leader of the Commons. And if you watch the King's coronation, you might remember as the woman in the blue dress who held up that incredibly heavy sword for a really, really long time. But Penny Mordaunt gone from the House of Commons. All right, still to come on Bloomberg Markets Asia, Standard Chartered Bank's going to tell us what's next for Indian bonds after their inclusion in JP Morgan's EM index. Hear their outlook for yields later this hour. This is Bloomberg. All right, let's take a look at how China assets are doing. I want to start with the CSI 300. That's off by 1% at the moment, a little more. If this continues, it's going to be 7 weeks in a row of losses, and that will be the longest losing streak in 14 years. For the CSI. We've got the Hang Seng a little bit softer as well. Yield on the 10-year holding pretty steady. That's an interesting story. Get to that in a moment. And meanwhile, the yuan still looking pretty weak, 729.07, but not a great deal of change there at the moment. Right, China's central bank has taken the next step towards selling government bonds to cool the record-breaking rally. The PBOC says it now has hundreds of billions of yuan of the securities at its disposal through agreements with lenders. Bloomberg News Desk editor Jill Desis joins us now for more analysis. So, Jill, why is the PBOC planning to borrow and sell sovereign bonds, and is this plan going to work?
Well, Paul, I think the entire idea here is it comes down to financial stability and really trying to protect the yuan and the value, obviously, of the currency. So the plan here is something that they've been telegraphing for at least a few months now. Kind of began with the refloating of the Xi Jinping speech, implying that they could, borrow and then buy and sell trade bonds on the market as they needed to. So what they've done now is they've sort of secured, with these financial institutions, this hundreds of billions of yuan that they can then sort of sell to sort of cool this really overheated bond market. We've seen sovereign bond yields fall to record lows. And so the idea would be to provide some stability by putting a floor under that. Now, in terms of whether this actually works, I mean, I'm not really sure that it goes as far as, say, sort of raising the yields. But I think at the very least, maybe you see some sort of short-term action here to kind of bring a little bit more stability to this market. So that's ultimately the plan here. We'll have to see whether it works.
So how's this going to influence liquidity and money supply at the macro level?
Well, that's a really interesting question. I'm not entirely sure yet, but I think what is going to be really interesting to watch here is that the PBOC has kind of put itself in a bit of a bind. I mean, part of the reason why yields have fallen so much is because, there's been a lot of bets on interest rate cuts to sort of prop up the economy. We've seen a lot of pessimism in the market about China's economic outlook this year, just because a lot of the challenges that they've been facing in terms of, bumping up, sort of removing price pressures, dealing with a lot of challenges to demand, that kind of thing. But what that ultimately means is that, as we're looking at the PBOC then potentially selling these bonds, that also has to kind of work in conjunction with other steps that they're taking to shore up the economy. I mean, is this going to happen at the same time that they say cut the reserve requirement ratio for major banks or make sort of OMO operations? All of that, I think, kind of plays into this larger, picture for liquidity in the market here. And I think it's makes it kind of tough to discern what that actually looks like through the rest of the year.
So is this going to change the outlook for the PBOC's monetary policy stance?
Yeah, I think that's another one that we're just going to have to look out for, because it's like, again, it's like, well, I mean, if part of the reason why yields are falling is because there's these expectations for, interest rate cuts to short the economy. I mean, the PBOC hasn't really, reduced interest rates in about a year now. And if they want to, I mean, presumably cutting interest rates would then drive yields down even more. So it kind of, again, is a really, really tricky situation for the PBOC to balance here. I mean, they've got to balance this idea of, sort of helping the economy, shoring up the economy with their policy tools, while at the same time trying to protect the value of the currency. So it's created a really, interesting strategy here for us to follow this year.
All right, News Desk Editor Jill Desis in Hong Kong. We'll be keeping an eye on the China bond auction later on. Plenty more to come. This is Bloomberg. Here are some of the top corporate stories that we're following. HSBC's sale of its German wealth management unit is said to be attracting initial interest from peers, including BNP Paribas and UBS. Sources say Julius Baer is also studying the business, which could be valued at about $640 million. HSBC is said to be keen for a buyer with a global brand and existing operations in Germany. Bloomberg's learned that insurance giant AXA has been in talks with BNP Paribas about options for its investment management unit. We're told discussions between the French firms have focused on creating a joint venture between AXA Investment Managers and BNP Paribas Asset Management. The combination would have a total of about $1.5 trillion in assets. The European Union is moving ahead with plans to impose provisional tariffs on Chinese EVs in a step likely to escalate trade tensions with Beijing. Chinese companies which did not cooperate with the EU's anti-subsidy investigation face almost an added 38% tariff, while those who did cooperate are going to get a lower rate. Western car makers, including Tesla and BMW, are also affected.
We are not seeing as a basis for retaliation, as what we are conducting is indeed in line with WTO rules. But we are also noting that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field.
Right, let's take a look at some of those China EV names and some of the tariffs that got put on them. We're seeing BYD slipping. Well, they're all slipping. BYD's had a tariff slapped on it by 17.4%, 19.9% for Geely. Li Auto, meanwhile, going to be attracting a tariff of, between 20.8 to 37.6. Similar story for NIO as well, but they're all slipping in the Hong Kong session at the moment. All right, with mainland markets minutes from the lunch break, let's take a look at the CSI 300. As I mentioned, that's on track for 7 weeks in a row of losses. That'll be the longest such losing streak in 14 years. Plenty more to come. This is Bloomberg. Welcome back. China markets just heading to lunch. Here's how things are looking. We're in red territory here. The CSI 300 off by more than 1%. As I mentioned a moment ago, on a losing streak for the past 7 weeks. Hong course now to erase year-to-date gains, and it's on a losing streak of the likes we haven't seen for about 14 years. We're also keeping a close eye on China bonds as well. We do, of course, have the PBOC saying it's got a pool ready of hundreds of billions of yuan worth of bonds, eager to cool the rally. But a lot of the analysts we've spoken to are sceptical that that's going to make a huge difference. It might just target the shape of the yield curve, manage risk, that kind of thing. And other than that, it's strictly an exercise in management. Well, let's check in on Japan markets. They are now coming back from their lunch break. Avril's keeping an eye on things in Singapore. Avril.
Yeah, Paul, it's really interesting to see how Chinese markets have underperformed, especially after the U.S. presidential debate, and Japanese ones have been overperforming, outperforming. And I think there's the narrative of investors looking for trades that will do well in the event of a Trump election win. So we did see Nikkei topics yesterday reaching those fresh record highs, a bit of a pullback today as we see the Japanese currency recovering. This is against the backdrop of softer dollar. It's moving well away from the 161 level, but it is still pretty weak. So raises the question when we might see intervention. Market doesn't really have a consensus of which levels might prompt this, but we are potentially watching out for some windows. I mean, if you take a look at next week where Powell is set to speak, if he reinforces the deflationary narrative, any yen buying then might be effective. And I think you'll pick up this point with our colleague Mark Cranfield from the MLive team a short while from now. But let's flip the board and take a look at what we're seeing in the chip space, because it looks like the Chinese equities underperformance is playing out even there. Take a look at how SMIC is faring. But today, of course, the gains in the chip benchmark for the region of Bloomberg is actually seeing that gain coming through really from Samsung and SK Hynix. SK Hynix is a stock that's run up about 90% so far in the past year, and the likes of Goldman and Citi actually see there for being more room to run even higher because of the sky-high AI potential. But of course, today, the focus has really been on Samsung after that profit beat, the surge coming through, raising optimism about that recovery in the memory chip demand after the post-pandemic slump. Paul.
All right, thanks, Avril. Let's get a bit more analysis now on Samsung's results with our tech reporter, Annabelle Jewellers in Hong Kong. So, Bella, it was a strong set of numbers. What were the key takeaways?
Yeah, well, fastest pace of sales and profit growth, Paul, that we've seen in a number of years for the company. So operating profit itself up more than 15-fold, coming in at just over 10 trillion won. So that's about $7.5 billion US dollars, past projections from Wall Street and other analysts, and sales as well growing more than 20%. So that's the biggest rise again that we've seen going back to 2021. We don't have the divisional breakdowns as yet because we know those come at the end of the month, but the clear read through here so far is that the memory chip demand is bouncing back. So it's been through that really severe downturn post the COVID years where we saw a lot of stockpiling, for instance. Now it's being really driven by AI demand in particular because there's data centers as well really playing into this, data centers that are needed to provide the infrastructure really to power AI tools. What that means is that Samsung can command a higher price for its memory chips. And CLSA, for instance, is saying that now they're around 15% higher than just the prior quarter.
So memory chip demand looking okay, but there's some concerns around some of those chips that power the AI revolution, particularly high bandwidth memory. What's going on there?
Yeah, this is really central to it. HBM and Avril was just really highlighting, and I think we've got a chart as well that just shows how Samsung is lagging behind SK Hynix, even though a minnow really in comparison in size to Samsung has been really able to catch a lot of the market for HBM in particular. And when you take a look at the share gains, as Avril was highlighting, that we've seen for SK Hynix over the course of 2024 versus Samsung, it really puts it in perspective, and the likes of Citi, Goldman Sachs saying that there's a lot further to run. So that's one part of the story. Investors are really concerned about what what Samsung is doing to catch up to SK Hynix in HBM. The other part that plays into this as well, just over the shorter term, is industry action, because we know that Samsung workers have been called by Samsung's largest union to go on a 3-day strike starting Monday. This is relating to pay disputes. Chip workers very much involved in this. How that proposed strike action plays out, whether it's resolved, could also affect chips and chip production in the shorter to perhaps medium term as well, Paul.
To what degree is the story around AI demand now starting to show up in Korean data?
Well, it's certainly having a big bearing, actually. And we saw that just this morning because we got the latest current account figures coming out and we had the biggest surplus going back 2 years. Again, it's that story of global demand that's coming through for AI tech gear as well, really boosting chips, smartphone exports as well. So that balance of payments data that we're showing here, it was a near $9 billion current account surplus rather in May. As I said, the largest that we've seen going back to summer of 2021. So yes, to your point, Paul, it really is showing up and helping Korea's economy here.
All right, technology reporter Annabelle Drull is there. Let's take a look at what's happening in the Forex space at the moment, particularly around the pound. Of course, it is election day in the UK. We're getting those results flowing in, and the pound pretty well supported at the moment, 127.7 against the greenback. Helped along, actually, by dollar weakness. That's something we haven't seen for a little while. So a softer US dollar also helping support the pound. But the pound's been on something of a win streak recently, and that seems to be maintaining its momentum today. The yen, meanwhile, strengthening a little also as a result of that unusual softness in the dollar. All right, let's bring in Bloomberg MLive strategist now, Mark Cranfield. He says the yen looks like it's going to be the winner in this environment, at least for now. Mark, we are waiting on jobs data out of the US. How much of a bearing is that going to be for the greenback and, you know, more applicably to what we want to talk about, the yen?
The jobs data is probably a bit asymmetric in terms of what it means for financial markets, especially for the US dollar, in the sense that what traders will probably respond to the most is a soft number, particularly if the unemployment rate hits 4.1% or higher, because a lot of people are looking at these models which suggest when the next US recession could begin. And a number of 4.1% is the kind of kickoff point for such an index. So people will be very concerned. The US job situation has been so strong for such a long time, but a few cracks are beginning to appear. We've seen some of the private data in the past couple of weeks does suggest that the jobs market is slowing down. The Fed will be aware of it. If they see the unemployment numbers pop up a bit higher, that's the one that will probably take notice of the bond market, of the foreign exchange market. So the US dollar is a little bit softer this morning. It would probably help to push that a bit further. And then, of course, people will be looking ahead to next week. Jerome Powell is speaking twice. They're very important stage-managed events, and he may well sound a bit dovish.
We do, of course, have a Bank of Japan meeting coming up at the end of the month. There seems to be a sense that we might see a little bit of tightening here. But if the BOJ ends up doing nothing, what's the floor for the yen?
Well, of course, we saw them disappoint the markets twice in April and especially in June. It appeared that they were gearing up to not only to tighten interest rates, but also to reduce their bond purchases, and they did neither. And they've pushed that ahead to this meeting, which comes at the end of the month. So really, the onus is very much on the Bank of Japan convincing traders that they do want to see a stronger yen. We've heard one or two verbal reports to that effect, but we haven't seen any action. And obviously, that's why you're seeing dollar yen reach such high levels in the past couple of weeks. But the combination of the Bank of Japan actually surprising traders with something a little bit more hawkish and the threat that there would be intervention at a similar time from the Ministry of Finance, if you put those two things together, then certainly the yen could gain some traction and we may see some surprising strength. But that obviously is something that traders haven't seen. They're not fully prepared for it. So you're getting a little bit of yen gains today. That's more to do with what they see out of Jerome Powell, the weakness in Bitcoin today, general change in sentiment. But in order for that to be sustained, obviously it's up to the Bank of Japan to do their part.
All right, Mark, we've got to talk about the UK election as well. We're seeing a bit of support for the pound. How enduring do you think that's going to be in the weeks going forward as, well, the reality of governing in a difficult set of circumstances starts to sink in for Keir Starmer's new government?
Investors will probably give UK assets a bit of a honeymoon period. There's relief that it looks as though the changeover to a new government is going to be pretty clean. It looks like it's going to be a sweeping result for the Labour Party, so no risk of a hung parliament, which would be the downside. That's been avoided. But actually, the biggest, for the pound's point of view, actually, the biggest support could come from the French elections. If we get a second round result, which is anything like the first round, that will weaken the euro through the effect of the euro-sterling cross, which is one of the most heavily traded exchange rates in the world. The pound would start to appreciate again off the back of that. So actually, we may get a delayed effect in the sense that traders are getting what they expected in terms of the UK election, but they may get a surprise out of the French election, which will actually be even better for the pound next week. So today, maybe no fireworks, might see some action in the UK equity market. But as far as the pound goes, it looks as though its best days could come after the weekend.
All right. We're just seeing some pictures on stage there of Rishi Sunak, almost certainly in his final hours now as Prime Minister, waiting to hear whether or not he's held on to his seat in Richmond, Yorkshire. I mean, he's almost certainly survived and will remain in the Commons. But as is tradition in these sorts of situations, one would expect that Rishi Sunak will announce shortly afterwards that he would be stepping down from the leadership. It would be certainly very unusual if he didn't. So there you see probably outgoing Prime Minister Rishi Sunak awaiting the results of his constituency there in Richmond, Yorkshire. Mark, I just want to get back to you. You mentioned the French election there. The second round of voting coming on Sunday. We are expecting that Marine Le Pen's National Rally is not going to get the majority that they're looking for. Have we seen something of a relief, or can we expect one in European assets with the start of next week, or is that already priced in?
No, I think there's room to price a bit more if we do see something which modifies the results in terms of Marine Le Pen's party, then certainly there could be room for French equities, especially probably French bonds, and maybe even the euro to gain a bit more, because that's probably not fully priced in. After the people were a little bit shocked at the fact the election was called so early. You saw a lot of disruption in French assets. That hasn't fully been unwound. We still, if you look at the pricing between the Germany-French spread, a lot of that has stayed in place, even though people are now expecting the second round not to be so strong. So certainly there's room for volatility on Monday.
Yeah, all right. MLive strategist Mark Cranfield there, and you see Rishi Sunak speaking on stage at Richmond, Yorkshire there. Let's listen in.
The Labour Party has won this general election, and I have called Sir Keir Starmer to congratulate him on his victory. Today, power will change hands in a peaceful and orderly manner, with goodwill on all sides. That is something that should give us all confidence in our country's stability and future. The British people have delivered a sobering verdict tonight. There is much to learn and reflect on, and I take responsibility for the loss. To the many good, hard-working Conservative candidates who lost tonight, despite their tireless efforts, their local records of delivery, and their dedication to their communities, I am sorry. I will now head down to London, where I will say more about tonight's result before I leave the job of Prime Minister, to which I have given my all. I will then return here, to my family's home, and I look forward to spending more time with you all in the weeks, months, and years ahead. Thank you.
All right, British Prime Minister, although not for too much longer. Rishi Sunak says he's on his way to London, where he will leave the post of Prime Minister. He says the Labour Party has won this election. He's taking responsibility for the loss, thanking his supporters there. Not announcing that he's stepping down as leader, but one imagines such an announcement can't be too far away. So there he goes, outgoing Prime Minister of the United Kingdom, Rishi Sunak. All right, still to come. We will be speaking to our next guest about India, the Reserve Bank of India, and the budget as well. Also, what's next for Indian bonds after their inclusion in JP Morgan's EM index. All right, that conversation up next. This is Bloomberg. All right, we've got some live pictures for you of 10 Downing Street, which is soon going to have a new resident, and that will be Keir Starmer, who has won this election. Rishi Sunak, just a very short time ago, taking to the stage for a concession speech in his electorate, saying that the Labour Party has won this election. Rishi Sunak says he takes responsibility for the loss and is now on his way to London for his final acts as Prime Minister before he hands power over to the incoming Labour Party. Just waiting now to find out just how big that majority is. And we're just getting the news at the moment that Labour has now surpassed the 326 seats required for a majority in the UK Parliament. So Labour has secured a majority, and as I say, we're just now waiting to find out how big that majority is going to be. Exit polls suggesting we're looking at somewhere between 405 to 410 seats, which is a commanding majority indeed, at the sort of scale that we haven't seen since Tony Blair's election win in the late 90s. OK, we've got the pound performing pretty well in this environment as well, having a pretty decent winning streak at the moment, 127.68 against the greenback. We're seeing a little bit of dollar weakness, though, as well, the US dollar weaker against all the G10 basket of currencies. OK, India's been trading for just coming up on 6 minutes now. As is the general theme around the region today, we are seeing some modest declines on the major Indian indexes. The Sensex there off by just a little over half of 1%, the Nifty off by about a third of 1%. Well, the addition of Indian bonds into JP Morgan's EM Sovereign Index has turned the market into a focal point for global investors. Now they'll be looking to other triggers that could impact markets in the coming weeks. Let's bring in Parul Mittal Sinha, Head of Financial Markets India at Standard Chartered Bank. Parul, thanks so much for joining us. We've seen a lot of bond buying by foreign banks in the run-up and subsequent to that JP Morgan Bondex inclusion. What's been driving this, and how long do you think it's going to continue?
Good morning, Paul. Yes, so India joined the Global Bond Index from JP Morgan on 28th of June. And in the run-up to the inclusion in June, we've seen almost $11 billion of investment from foreign investors. Apart from this direct investment in Indian bonds, there has been almost $6 billion of investment in INR-denominated supranational bonds. So there is an obvious interest from investors. We saw almost $2 billion of inflow in the month of June, and we expect this kind of inflow to continue over the next 10 months as the index rate rises to its maximum of 10%. And we think as and when the global yields start moving lower, if and when the RBI also starts cutting rates, the intensity of inflows might pick up as, the capital gains look like they're just around the corner. So we are very optimistic on that as well.
When do you think the RBI is going to be in a position to begin easing?
So what we think is they already have the room to cut rates. So if we look at where inflation has been trending around 4.5%, there is a strong confidence that for the full year, CPI for India will average at 4.5%. Core inflation has been trending much below 4%, which is a strong relief for the central bank. And our operating rate, the repo rate, is at 6.5%. So there is enough room, but the growth remains strong. And looking at how the global developments are with U.S. Growth looking good and inflation being sticky, RBI is taking its time to cut rates and give more growth impetus to the Indian economy. So we think the first rate cut will come in October. We think it's a shallow rate cutting cycle of only 50 basis points, but it can be around the corner in October and December.
And how about the fiscal side of the equation? Now, what do you expect from the current budget or the upcoming budget? And what are the borrowing numbers likely to be like?
So we think the government is going to stick to their fiscal consolidation path. They have given a fiscal deficit target of 5.1%. In the July budget, which will come sometime next week, we don't expect them to deviate from that 5.1% deficit target. In fact, there was a positive surprise with the RBI giving a much larger dividend than expected, almost $12 billion more than was expected. So they have room to address some of the concerns, the growth concerns in the rural part of the economy. We think the budget will remain focused on infrastructure spending. That focus will continue. They will spend on the growth of the digital economy. So they are, talking about enabling more AI, rolling out 5G in the rural areas, and there will be some, boost to the rural consumption. So these three will come, but at the same time, we don't expect them to slip on the fiscal deficit, fiscal consolidation path.
All right, Parul Sinha of Standard Chartered Bank, thanks so much for joining us. Just want to recap for you the news coming out of the United Kingdom. We did hear from outgoing Prime Minister Rishi Sunak, who said he has called Keir Starmer, the Labour Party leader, and conceded defeat. He has said the Labour Party has won this election. We are expecting to hear from Keir Starmer very, very soon. The BBC saying that the incoming Prime Minister will shortly be delivering a speech. Just a quick note on Jeremy Hunt as well, the Chancellor. He's hung on to his seat only just with a margin of less than 1,000 votes. But Labour has since surpassed what it needs for a majority. It's got 326 seats. Just waiting now to find out how big that majority is, and also waiting to hear, as I say, from incoming Prime Minister Keir Starmer to deliver a speech shortly. That is it from Bloomberg Markets Asia. More coverage of the UK election up next on Daybreak Europe.